Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It is April 1st. Isn't that April Fool's Day? In the morning, pre-market, a nice warm day on Wall Street. I believe it's going to get up to like 75 degrees today, 77 degrees today. Probably warmer on Wall Street. I'm actually in the suburbs. So I just wanted to thank everybody for tuning in yesterday. It seemed like when you put Warren Buffett in the subject title of the podcast, you get more views. But it was a fun day yesterday, and it was nice to see the rally. And then it was nice to be humbled that, I was saying I'm not buying this 10% correction because I don't think it's that big of a deal. And of course, we get like this crazy bounce. So I guess I was supposed to be a little ashamed that I didn't buy the 10% dip exactly when we hit 10%. I mean, the 10% correction didn't last more than a few hours. And then I believe Tuesday we got the rally. Today is now Wednesday, and we're seeing an extended rally now, or a follow-through rally. And Warren Buffett had come on and he's like, a 10% correction. What the hell is a 10% correction? I mean, that's nothing. That is nothing. And I guess that made me feel like, hey, maybe that's correct. We're not trying to chase, we're not traders, we're not trying to chase a 5 to 10% correction, because what's that really, we would rather see these stocks and long-term investors and traders pretty much like throwing up the white flag saying, mercy, we give up. And that's when you kind of go in. Some people call it this like whoosh we see mid-market day, which allows you to buy as well. We didn't get any of those. We didn't even get one day that was over 2% sell off. I think we might have on Monday, but we really didn't, or even Friday last week. I'm pretty sure we got a pretty nasty day in there, but it was very orderly. 1% down, 1% down, 1% down. And, we didn't really get anything that had that whoosh down. And that usually happens like market day. So you have the opportunity as an investor to buy on that really fast leg down. It doesn't last very long, and then it kind of catches support. If we would have gotten that, I may have bought. But long-term investor, really not the end of the world if you didn't buy it. Really, you should act as if you live on an island and you receive the news a day late. A lot of people call a 3-day rule. So if a stock like Meta reports earnings, the stock sells off, you give it 3 days for it to catch its breath. I would say that is something we can also rely on when it comes to a 10% dip. 10% correction is not that much, and Warren Buffett agrees. And then let's wait 3 days to let the news work itself out. Let's see how hard this rebound comes. This follow through or this rebound. Does it take 3 days, or do we sell off later tonight or tomorrow morning? Or maybe there is a long 3-day weekend, and President Trump is supposed to make remarks on national television tonight around like 8 or 9 p.m. So potentially he sees a situation where the markets could panic sell, so they don't have to hold, traders don't have to hold their positions through a 3-day weekend because we have Good Friday. So maybe he's thinking, hey, it's Wednesday night, I'm going to give, a speech tonight in the Oval Office, and I'm going to try to calm down markets. I mean, that's quite possible that some of these headlines are trying to calm people's nerves. Part of it may be true. They actually are maybe trying to exit this war slowly now and methodically. Another thing is true is that maybe they're just gaslighting the U.S. public. Maybe this is all bullshit. And what did we really get by going in there? Now, I know a lot of older folks that watch Fox News, and they think that they actually agree that it was okay to go, that it was a good idea to get in there and just stop them from building nuclear weapons, and they're trying to destroy uranium enrichment and trying to make sure that we set them back for another decade. And they're bad news. They're terrorists, and they shouldn't control the Strait of the Hormuz. Not to get political, but what did we really accomplish? If we're going to now exit this war and the Strait of Hormuz is open and we don't have any control over it, and Iran still has control over it, is that what was the purpose of this? See, my opinion the entire time was the purpose was to kind of chokehold China so we have more control of the Strait of Hormuz and just oil logistics and oil supply in that region a little bit. I never thought it was about stopping them from building nuclear arsenal. I thought we accomplished that in June of last year during the 7-day war. So, I'm just saying that I don't understand, and that's okay. That's not made for me to understand. I'm just a retail investor here. So it doesn't matter what I think and what my political beliefs are. I just don't understand. If we don't have more control of the Strait of Hormuz, then what was the whole point? That's my question. Again, this is not a political show. I'm just confused. I don't see how we just walk away now. Like one minute we were putting troops on the ground. Oh, that's what I wanted to say. A lot of this older generation that I know watches Fox News, they all think that we're going after we need to take over Karg Island. We need to take over Karg Island. Something's not lining up, guys. I mean, if anything, Karg Island could just be a distraction to go after the bigger island that's kind of more in the center of Strait Hormuz. I mean, nobody really knows. Why would we even deploy the 82nd Airborne Division into Karg Island if Iran is just going to strike them with? First of all, we already bombed the island. Just a lot of bullshit that's not lining up, and I'm a little disappointed by this whole situation that the U.S. has gotten themselves into. Seriously, I wish this was just about oil. I think it is just about oil, but and about the Strait of Hormuz. I just wish that people would kind of realize that this is all a Cold War positioning, trying to get leverage over China type of situation. I wish people understood that. Look, South Korea is having a banger of a day. The Kospi's had an unbelievable day. All's good in the world. The Nasdaq is continuing its follow through. I mean, the Nasdaq 100 is up almost 1% pre-market, and it was up 3.39% yesterday. And a lot of that has to do with this additional bump we got in equities and in stocks at the moment we got over the wire. The Iranian president apparently said something about, hey, we are willing to end this war on these on conditions that must be trusted, or whatever the saying was. That was at like 12:38 p.m. during the day, and then you saw this big leg up after that. S&P's up 0.6% pre-market. It was up 2.9% yesterday. So definitely some follow through. Bitcoin's not really doing much, but gold certainly has had its bounce, a significant bounce here off of that. That was on March 20th. It hit a bottom. Look at that. This is the 1 year on gold. Look at how it just bounced off that 200-day. What an unbelievable bull market for gold. And then I'm sure silver is making a similar bounce, but it's just not as pretty as gold's 200, that bounce in gold. And yields aren't really doing much here. They pulled back slightly. So what I wanted to talk about today, well, let's talk about, again, Warren Buffett and how cool it was that he was on CNBC with our friend Becky Quick. If you haven't listened to it, I tried to find online the most important stuff or the most important part of it. But the most important part of it, which was a theme of my podcast over the last few weeks, was like, we're professional buy the dippers, we're the best buy the dippers, but we're not buying this dip. And for one, it was because we didn't have a lot of cash on the sidelines here at Rigatoni Capital. Number two, it wasn't really that crazy of a dip. It was only 10% correction. And the 10% correction doesn't, just because you hit 10%, yeah, it's a psychological number. It worked this time. All right. So let's listen to this little piece real quick, okay, on Warren Buffett discussing some important stuff, I believe. I thought this was the 10% dip part. Let's listen to Warren Buffett real quick.
In the market to deploy that cash? And if so, do you see that coming?
Yeah, if there is a big decline, we will deploy. I mean, but we won't. We will deploy it because stocks are attractive or businesses are attractive to us, and we are not planning to sell them next week or next month. So we want to be right on them.
Right.
And we've had our American Express stock 30 years without having, Coca-Cola close to 40 years, 35 years. And on the other hand, there's things I changed my mind on fairly quickly. But the goal is to own the own businesses. Mm-hmm. And when we buy Occidental Chemical, we expect to own that 50 years from now. The world can change in some way, but that is, we do not buy that with the thought of resale.
You've sold a lot of a stock that's done very well for you, Apple.
Yeah, well, I sold it too soon.
Yeah, it's made.
But I bought it even sooner, so it worked out. Yeah, I think we've made over $100 billion.
Okay, so the whole point of me playing that was, just because you have a 10% correction doesn't mean you deploy cash. It means you find that stocks are attractive. That's when you deploy cash. Does that make sense? And I will come on here and I'll say that I think that American Express at $2.92 per share, American Express was actually attractive. And that was the one only stock that I thought was the most attractive. In fact, you're at $3.05 per share today. If this thing is going to trade anywhere close, if it's going to pull back slightly again, I would probably buy it. Now, that's not financial advice. I don't own American Express. This is a new entry position for me. Google sitting here at $291, I think is pretty attractive, but I just wish we saw more of a sell-off. And Goldman Sachs was trading below $800 per share. In fact, it was trading around $780 per share. I thought that was kind of attractive. And honestly, I don't really think anything else was attractive. I mean, I like buying the NASDAQ 100 because it's a great index type of ETF, right? You get the 100 best stocks on the NASDAQ. I think it's a good way to play mega cap tech stocks because you don't have to pick the winner. It'll pick the winner for you. And then TransDigm, I do like TransDigm, and I do like the ITA. So TransDigm, ITA, GE, those are other companies that we've been looking at here on Rigatoni Capital Podcast. We look at it, like every single day. And I didn't buy anything. And, I wanted more of a sell-off. I just didn't like that the S&P hadn't rolled back enough. The 10% correction was great, but I needed to stay there a little bit longer. And yeah, then I probably I was so close to buying, and but right now I'm not buying. Okay, so we talked about Warren Buffett. Let's talk about Jordi Visser and the larger problem at hand, which is, I think, the AI disruption story in software stocks. So something like IGV, the SaaS, it's the software ETF. I think half of those companies in there are really good investments. Like Palantir's in the IGV. It doesn't even make sense. There's companies in there that aren't even SaaS. But I think the IGV is okay for like a swing trade when it was selling off crazy the last few weeks and months. And my suggestion is I don't like software SaaS type of stocks like a Salesforce, like a Monday, like a Workday, because I'm afraid that there's no value there anymore in these type of stocks because I believe in the AI disruption story. Where I disagree with a Jordi Visser is that, mega cap tech stocks are also going to be disrupted by this whole idea of AI disruption and like the mom and pop entrepreneur, because he has now all the tools of AI that he's going to disrupt something like Google or Microsoft. Well, Microsoft, I'm not a fan of either right now. So, but like, I don't think in the age of AI, Google and all of these other, Apple's not a good example, right? And Nvidia is not a good example. But Amazon, I mean, you think that an entrepreneur is going to disrupt Amazon? I'm just confused by all of that. This idea. And we could go through a stretch where the Mag 7, and I hate that word Mag 7 because I don't invest in Tesla. I'm not a big bull on Tesla or anything like that. But and why is Apple trading alongside something like Google and Amazon right now? It doesn't make a lot of sense. But let's just call them the Mag 7 to make this easier. We could go through a consolidation period for the Mag 7 for a year or two. That's certainly possible. And of course, I would think that Jordi Visser is a little more long-term thinking than that. And I don't know if Jordi Visser is like suggesting that you shouldn't buy those stocks. I guess he's saying don't buy the Mag 7. Definitely don't buy software stocks. But I would think that he feels that maybe in a year or so, Mag 7 will come back. That I'm not sure. But let's listen to him talk about, and he's being interviewed by Natalie Brunell on her Coin Stories, which is a Bitcoin show. And she's kind of asking him, like, give us a little idea of what you're thinking about when it comes to AI disruption and the white collar job issue that we may be having.
It's zero. If you want to be a nurse or you want to be in the healthcare field, we still have a labor shortage, and those job creations are every month. If you want to be an accountant, you're fighting against artificial intelligence. If you want to be a truck driver, you're not fighting against artificial intelligence yet. The problem is, over time, I do think there's going to be a problem with the labor market. But here's the thing. People have to realize that there's a lot of people that retire every year relative to people to replace them. So we have a demographic issue where we don't have a lot of replacement of labor. We don't have immigration anymore. So the problem is we don't have jobs. So if you have kids and you want to put your kids in daycare, it's not easy. If you want to put them in school, like, you hear these problems from everyone across, especially in the urban areas. It's very, very challenging, and it's only gotten harder. So I don't want people to think that AI is this incredibly potent force that is disrupting everything. It is taking jobs, but the media also makes it seem like a lot of people are losing jobs. Right now, we kind of have all these moving factors. I think the pressure will be there, but I do think the disruption that happened is real.
Well, I do think more of the risk is in the white collar jobs, right? In the same way that blue collar jobs were disrupted when manufacturing.
Really good podcast, but this is the meat of the part that I was interested in. The chapter starts around at the 14-minute mark, and it's called AI Disrupting Industries. I think this is important. Jordi Visser has so much credibility for me because he was calling for this SaaS sell-off before it really started to occur. And he saw this before everybody saw it. And, he saw the AI disruption story before I saw it. So I take what he says pretty credible. I think there is a potential problem. It's a headwind for equities because if we see a lot of white collar job losses, I mean, that hits the broader economy. That can cause at least a slowdown in consumer spending, which is a big part of our GDP here in the US. it hurts American Express. I mean, it just has so many different. It will find itself into a lot of parts of stocks, and it kind of becomes one big story, and it becomes a slowdown story. And I think that it is a serious issue that some of the white collar jobs that AI you see Claude doing what it can do and how it can take over your computer, and OpenClaw and Perplexity. There is an issue with that, kind of like an entry level type of white collar job that definitely it should be a little concerned. But I don't know. I mean, I guess I'm a little unsure. I just don't live in that tech world. I'm in commodities. I live in a completely different world. And God, we could use anybody that's willing to help us in terms of selling, because we're in sales, and we could use the administrative help. And if they want to use AI all day, let them use it. I mean, we're all almost understaffed where I work at my business. Okay. So then we saw Oracle lays off workers amid heavy AI investment. I think Oracle has about 160,000 employees. I don't know for sure. Don't hold me to that. Oracle employed about 162,000 people globally as of end of May. And then you saw them apparently supposed to be cutting about 30,000 employees. And it's going to be like over a certain time frame. And, there's a lot of cuts over in India as well. These are all white collar jobs, right? So, and then of course, shareholders applaud something like this because Oracle is not going to have any free cash flow for the next few years anyway. So definitely, like it's happening, right? It's happening. And then we know Meta had rumors it was going to do something like a big job cut as well. Pretty much that was what I wanted to talk about. By the way, somebody had said, they commented on YouTube, GF something or other, said, refreshing to hear a normal smart person discuss the market. Subscribed. Thank you so much for that nice comment. And, I think that I personally, if you have been listening to this podcast, it's a little choppy. I think it's maybe because I haven't drank my coffee yet. I'm not saying I'm a stupid person, but I'm definitely not something like a Martin Shkreli type of smart in terms of IQ, if you hadn't noticed. And Martin Shkreli is definitely not normal, though. He's definitely not a normal guy. So maybe that is a really nice comment he gave me. He said, yeah, okay, I debate him on if I'm smart, but I'm definitely normal if we're comparing it to someone like Martin Shkreli, who's crazy. I see Constellation Energy had their investor day yesterday. Ticker CEG. We talked about Constellation Energy a lot a few weeks ago with a guest I had on the podcast, which is Kevin Bagholder, who's awesome. He's on Substack. It seems like they were just maybe overpromising on certain projects. And of course, they seem to disappoint in terms of 2026 guidance. That's how I understand it. It says that Constellation tumbles after posting underwhelming guidance, failing to announce a new data center deals. So we'll have to ask, I guess, Kevin, if he comes back on, what's going on with Constellation. I tried to do a little bit of research. I just didn't have time. But if you go on fiscal.ai, it shows you this guidance March 2026 report from Investors Day, which happened yesterday, I believe. And it gives you the transcript. I guess they talked, and then it gives you a report. It even gives you slides here. So really good stuff. A really good place to get all of your information in one spot. Definitely an expensive application. I mean, fiscal.ai. It's definitely an expensive subscription, but it is nice that I get to get all my information all in one place. I don't have to go, on the SEC website and each time try to find the 10Ks and find everything. Everything's all in one place. So I like that. And there was this article, this post on buying the dip. This AI agent will do it for you. Public, which is the kind of like a brokerage app similar to a Robinhood, which has a pretty nice, it's a pretty nice brokerage app. It says Public, an investing platform, will offer AI agents that can help you put your brokerage account on autopilot. And it's telling you like it'll go long this and short that if this occurs, and it'll automatically hedge for you, and it'll automatically do stop losses for you, and it'll automatically buy options for you if this occurs, and all that stuff. Definitely like this automated personal finance type of a post here, this article. My opinion is, wow, like this is really cool, but it's not for me. It's not for Rigatoni Capital. You know, we are really prideful off of our gut. My gut has gotten to me where I am today. My gut has gotten me to an unbelievable buy and hold portfolio that I've had. The Rigatoni Capital portfolio, I've had it for like 11 years, and I'm up 4,000% on NVIDIA. That was all gut, and some of it might have been me being naive. Like I didn't know what I didn't know because I was younger, and therefore I knew to hold on. Therefore, I held on to something like NVIDIA when it dropped 70%, and you know I held on to it because maybe I was stubborn and naive, and you know, so definitely. Definitely like the idea of going by your gut and not automating anything by AI when it comes to your investment portfolio. If you're a buy and hold portfolio, if you want to try something for fun, like some kind of hedge fund thing, and you're writing code, that is cool. Maybe that's something separate you do. But the Rigatoni Capital professional buy the dipper, we do that on our own. We don't use, wouldn't recommend using any kind of automation, but the idea makes sense. And I think it'll be a debate that goes on for the next 10 years. And both sides make attractive points on why you should automate it. Like I should have automatically bought that 10% correction on Monday, right? I mean, looking back, it looks like I should have done that because we have had such a nice bounce. And then we've had this follow through today, which is on Wednesday. So, yeah, I agree with that. I still like to, I'm more old school. I'd rather do what Warren Buffett does and kind of take your time and be patient and kind of see what stocks are attractive at the time. And if you don't see anything and we're in a 10% correction, then you don't buy. You know what I mean? This post is from Mike Zaccardi on Twitter and on X, and he says supermarket inflation fell to 2.3% year over year in March. And just so you know, a cumulative, that's how I understand it, a cumulative supermarket inflation over 7 years is 47.9%. So that is a broad average. So going to the grocery store 7 years ago would have been in the year 2019 versus going to the grocery store today. Your pricing on average of your supermarket goods, your grocery store items are up 50% in price. So I think people know that, but most people probably haven't understood that. The best way to preserve your purchase power is, what do you guys think? Owning assets? Yeah. So you can own cash producing assets, which Warren Buffett would agree to do, and that's like stocks. Or you could own something that isn't a cash producing asset and is also can also preserve purchasing power, which is gold as a hard physical asset, or maybe even Bitcoin, which is a digital form of that asset. So there are these assets that have preserved purchasing power since 2019. You know, people like to talk shit on Bitcoin, but if you look at Bitcoin versus gold since 2019, I bet you Bitcoin has overperformed gold during that. If you look back through 2019, I don't know for sure. It's probably pretty close now because gold has been on such a tear. But I think we need to just remember that owning assets is really important. That's why I started my Substack, Rigatoni Capital Podcast, on trying to get younger people to make sure they understand that the only way to achieve wealth is to own assets, and to preserve your wealth. So let's say a lot of people said, well, the way to get to wealth is to start a new AI company and just crush it. Yeah, I'm not smart enough to do that. But anybody that does, and then you build it up, I mean, how do you think all these people really get wealthy? Like Mark Zuckerberg, they own stock in their own business. So yeah, it will be interesting to hear Trump's speech tonight at 9 p.m. I understand that the stock market only trades on WTI and Brent oil. I understand that. But for long-term investors, I guess that really doesn't make sense. I mean, it doesn't really matter for us, for long-term investors. So thank you guys. Not a lot to talk about today. It seems really quiet, right? There's no earnings. We'll have jobs data that comes out, a big jobs report that will come out on Friday when the market's closed. That's Good Friday. So this is starting to feel like people are winding down for the week in terms of investing, the market at least, and because we're off on Friday and the market's closed on Friday. So it seems like things are kind of becoming a little bit slower. Maybe the headlines are becoming slower. I'm not sure. But definitely it would be nice to see a bounce in stocks here. And I'm okay with that. I didn't need to buy this dip. I was happy where I was. I'm happy where I am. And next time, maybe tomorrow, I'll show you my portfolio, my top holdings. All right, guys. Thank you so much. Rigatoni Capital can be found on YouTube, Spotify, and Substack. All right. Thank you. Have a good day.